I really think that this is the most profitable strategy I ever came across with, and I'm talking about the market maker buy model or the market maker sell model from ICT himself. And why I'm saying this is just because I can't unsee it. Like, every time I look at the markets with my existing strategy, I just see a market maker buy model or market maker sell model. And so in this video, I'll explain you exactly in very simple terms how I understand this and how I use it with my existing strategy, because I really think this is a very important framework to understand if you want to really understand how smart money operates. So yeah, without further ado, let's just get right into it. Okay, so this is how the market maker sell model looks like. We always have two curves, whether it's a market maker buy or sell model. We have the buy curve and we have the sell curve if we are talking about the market maker sell model. Here we build up a lot of sell side liquidity with these lows, and at the end we take out all of that sell side liquidity with a market maker sell model. In the other way around, in a market maker buy model, we build up a lot of buy side liquidity in the form of these highs, and then finally within our bias we take out all that buy side liquidity. And so there are two very important things when it comes down to this model. First of all, you want to have a point of interest. This is the top of the market maker sell model and the bottom of the market maker buy model. So this is basically where we maybe have an order block, a fair value gap, breaker, any kind of support or resistance, but preferably this needs to be like above a high in a market maker sell model or below a low in a market maker buy model. So this really needs to be in a liquidity pool and some other confluences, and we really want to see a quick shift from here in order to confirm this market maker buy model. But this is not the only thing. You also need a second thing, and that is the original consolidation phase, and this is basically our final target. As you can see, I have a little eye right here. This is basically indicating, okay, this is the final target, right? This is the draw on liquidity for the trade. That's this consolidation phase. And why? Well, because this builds up a lot of sell side liquidity also, if you're talking about the market maker sell model, and a lot of buy side liquidity for a market maker buy model. So we all know that ranges like consolidation phases, they can build up a lot of equal highs and equal lows. So basically this is how you can use this model. First of all, spot the point of interest, and then if we have a point of interest and if we have a good reaction of it, then you want to link this to an original consolidation phase, which is this one right here. And so if we have a point of interest, we have our consolidation phase, then this can be a potential market maker buy or sell model. So what do we also have in between these curves? What is also very important to understand is that we have these accumulation and distribution phases. So basically in a market maker buy model, we have our original consolidation, which is the key in spotting a market maker buy or sell model. Then we have an accumulation phase, then we have our pivot point, then we have an distribution phase, and then we have the redistribution phase before finishing this model, before taking out this sell side liquidity. Now, on the other hand, on a market maker buy model, we first have a consolidation phase, but we first start with a distribution phase, then we have our pivot point, then we have our accumulation phase, and here we have our final re-accumulation, as you might call it, before taking out the final buy side liquidity, before taking out this final target. So how can you actually use it in your trading? Well, for me personally, I just use this with my existing strategy. Like, I just trade from liquidity pool to liquidity pool, and this is basically a liquidity pool because this is our pivot point before smart money reverses back price to another liquidity pool. And so what I do now is I try to link this pool towards this consolidation phase. So I look for consolidation phase, I look for maybe an accumulation phase, and I just try to spot this pattern in the market. Maybe you don't find this in the market very often, but you have to understand this is the ideal scenario, right? Consolidation, accumulation, pivot point, distribution, redistribution, the other way around for a market maker buy model. This is the ideal scenario, right? But the most important thing is the draw on liquidity, which is the consolidation phase, and the pivot point. And this is of course also important, but you might not see it as perfect as this. So how do I enter? Like, this is just with my previous strategy. Basically, this is literally my entry model. We just sweep inside our POI, and preferably I want a second sweep, so something like this, and then basically the same thing, right? I want to see two sweeps right here, a break of structure with the low that brought us to our last high, and this is where I potentially enter on the low time frame discount right here. So it enters somewhere right here. Either there's like a internal high that's been taken out where my entry is, or there is a fair value gap being created, an order block, whatever, but it all remains the same because I am gonna enter right here, put my stop loss at the POI mitigation only if we have a valid break of structure, and then our final target for this model is always the original consolidation phase. Now it's the other way around. If we're talking about the market maker buy model, this is our pivot point. We have a valid break of structure if we have two double sweeps right here. If we have one double sweep, of course, and then we have break structure and we enter on this discount in case we are going long, and the target is exactly the same, the buy side liquidity of the original consolidation. Now, why is this actually important to understand? Well, let me tell you, because you can have a lot of losing trades if you don't understand this. So basically, we have our market maker buy model, let's say, and we spot these liquidity points. Like this is liquidity, this is liquidity, this is taking out the liquidity. And so if you're a normal SMC trader, maybe you just see this as a liquidity pool, which it is, of course, and then you see here a supply zone, right? And then what you do is you see a mitigation of this, you see a double sweep right here, and then what you do is you basically short it right here, right? After this break of structure, whatever. So this is why it's very important to understand these levels, because you can just be in a reaccumulation phase of the market maker buy model and just get stopped out because we are literally just about to take out the drawn liquidity of this market maker buy model. And so if you don't understand this, then you're gonna get stuck with just trading supply, demand, liquidity, because this is basically how smart money operates, right? This is the manipulation move where a lot of people will short because they see we are above highs, we are in demand zone. But if they don't have their bias right and they don't see and spot this model, then they can basically get stopped out very quickly. So it is very important to understand that these models, these market maker buy and sell models, are way more important than just like having some highs and a demand zone, right? It is the overarching story that matters here. And in this case, it's a market maker buy or sell model. So this is the most important thing. If you can spot this, then you can actually spot where a lot of SMC traders might get stopped out, and this is where your edge comes into play. This is a very, very strong model. Now the other way around, let's say we are in a market maker sell model, then we have like a demand zone right here, we have some equal lows right here, you might see like a double sweep and then a fake break of structure. Everyone will long it right here thinking it will go up, but they don't understand that we are in a redistribution phase of the market maker sell model. And so this maybe just be a supply fill on the lower time frame, fair value gap fill, and a fake break of structure. Now, of course, you still can take profitable trades if you don't see this market maker sell model, because maybe the break of structure is with a lot of momentum and like it's ready to go up. Yes, of course, but then maybe you're not looking at the market maker buy or sell model. And it's very important to just understand that this needs to be a valid break of structure. If it's not, maybe just a manipulation phase before respecting this model, right? Like this. And so this actually becomes very, very interesting if we connect this with our daily bias. So what do I mean by this? Well, our point of interest will be in a premium if we are looking for shorts, and our point of interest will be in a discount on the higher time frame if we are looking for long. So let's say the daily is bearish, the weekly is bearish, everything just looks bearish, ready to take out new lows. So what do we want to do right now? So let's say I just said this, like we are bearish, right? Okay, we are bearish. So what do we want to do? We want to enter shorts right in the premium. So we need to find a point of interest like this inside the premium if we are bearish. And then if we enter that point of interest, we have a lot of nice weakness, confirmations, break of structure. Let's enter a short. Why does this become very powerful is if we can link this to an original consolidation phase and we follow our bias, then this is just our drawn liquidity. This is how I just trade normally, but now this just makes much more sense because this is our final target. We have our pivot right here. We can spot also these redistribution and accumulation phases, which I didn't use earlier on. And then we can actually use where are we in this model, right? And this is just following the daily bias. We enter in a premium zone. We have the right confirmations. the drawdown liquidity is the original consolidation of the market maker buy or sell model, and this is basically just beautiful price action, right? And so I said that I right now just enter right here, right at the pivot, but this is actually something I realized is maybe not that smart to enter right here. Maybe it's a very good RR because you literally enter at the top of the bearish trend. But why I'm saying this is because ICT actually leaked his favorite strategy, and it's with this market maker buy or market maker sell model, and he basically likes to trade the redistribution of the market maker sell model and the reaccumulation right here of the market maker buy model. So basically the pivot is confirmed, and then he just likes to trade the redistribution before taking out the drawdown liquidity. And why? Well, because this is the most explosive move, he says. So this is basically, this happens very, very quick. If we have the redistribution of the market maker sell model and we enter somewhere here when taking out the high or entering fair value gap, then this can be a very strong trade. Same thing with the market maker buy model. We just enter on the manipulation phase right here before having this explosive last final move towards this buy side liquidity of the market maker buy model. So I'm just testing out. Just why I'm saying this is because maybe here the R4, the R1 is still bearish, but once we are here in the redistribution or the accumulation, then we maybe already switched in the mid time frame on the R1 and R4, and this is maybe a better trade, right? So I'm just testing it out, but basically the principles stay the same. You can enter right here if we get the right confirmations, or you can enter right here after almost taking out the final draw on liquidity. So now, of course, it's very easy to just draw this on TradingView. So let's look at some live examples. I'm gonna try and find and spot this market maker buy or sell model. This can work on every time frame. It doesn't really matter, but always remember that the higher time frame holds higher power. So basically, what am I looking at? Let's just look at Euro GBP. So basically what I am looking at is a bias. So just my original strategy, I'm looking for my bias in the market, and then I connect a point of interest to a market maker sell model if we are bearish, or a market maker buy model if we are bullish. So we basically need a bias, a pivot point, preferably inside the liquidity pool, inside the premium if we're looking for shorts, inside a discount if we're looking for longs, and then we want to link that towards a draw on liquidity, which is the consolidation phase of these models. Okay, so I think I already found a market maker sell model right here. So basically we are looking very bearish on the higher time frame. So what does this tell us? We only want to look for shorts inside the premium zone right here. Okay, so maybe we have some highs right here, nice liquidity, a fair value gap, an order block. So this is a nice pivot point, right? So what do we need? Pivot point for a market maker sell model because we are bearish, which is right here. And we need to find our draw on liquidity, which is the consolidation phase. And so I immediately see some equal lows right here. So this can actually be the consolidation phase that we are targeting, which we see play out right here. So this can be the consolidation, this is the maybe the accumulation, then this is the pivot point, and then we have our reaccumulation maybe, and then we have our reaccumulation before taking out the final draw on liquidity and before going further towards our bias. So of course this is not beautiful in every way. You just need to find a strong draw on liquidity, set the trend, find a pivot point, and maybe this is just a market maker sell or buy model. I really think this is because we have a pivot point, we have an original consolidation, we take out this, so this is a valid market maker sell model in my opinion. So maybe another example, we are here very bearish, like just overall we are looking very bearish. So this is the premium, then we have a big fair value gap on the higher time frame right here, we have our pivot point right here. We have some nice confirmations, 1, 2, 3 sweep, break of structure, maybe enter on the break of structure. And then we want to find our original consolidation, right? And I think these equal lows right here, original consolidation. Now they don't have to be perfect. Maybe you don't see it as equal lows, but this is a lot of liquidity because stop loss right here, stop loss right here. You just want to find a lot of liquidity. And I think this can be seen as the original consolidation, with this being the accumulation, this being the pivot point, this being the distribution, this being the redistribution, and then we got our final move, which ICT says is his best trade ID. So it's something like this. I don't know how we trade it, but basically the redistribution of the market maker sell model. Now, maybe an example in the market maker buy model, like this doesn't always have to follow the daily bias, because maybe your daily bias is wrong, or there's some other important journal liquidity that needs to be taken out first. And so that journal liquidity can be the consolidation of a market maker buy or sell model. So maybe this can be a pivot point. So it's very important to understand that this pivot point happens very, very quickly. So the original consolidation, for example, maybe it's like here, and then we have our pivot point right here. You see that this is just super fast compared to this consolidation and these accumulation zones. So this is the key, guys. You really want to see a very strong reaction from your pivot point, and then you want to see taken out all that buy side liquidity from here on the buy curve, right, before taking out our final target right here, because I think this is maybe a market maker buy model pivot point, original consolidation, a lot of highs being built up right here in form of liquidity. So we have our sell curve and our buy curve, which takes out all this liquidity, with the final target being this. So maybe we have our breaker structure right here, we enter on the fair value gap, and you see that this can really make some nice trades, right? So this is the first entry, and then the second entry can be on the reaccumulation, sorry, which is, I think this is the reaccumulation, and then like they enter right here or something, I don't know, targeting this final liquidity. But I think you guys have an idea. These are not the best examples, because I'm just trying and spotting out right on the chart without preparation. So I hope you had any value in this video. If so, a like and subscribe would be appreciated. I really like to see and trade this right now with my existing strategy, because I think it's a really nice confluence. And so yeah, I hope you have an amazing day, and I'll see you in the next one. Peace.